Hi, what's up, guys? This is Utevik. So, person been asked me question about how to spot inducement with the SLK video where I been do, and I would like to make reference to that particular video again, that particular setup again, and properly explain the inducement. So earlier I made the video regarding this particular setup that played out on March 10, right? So if you see this place now, I was saying that daily candle rejects daily, but if you check, you go notice as this candle, as this day come reject this day close, e form liquidity here. So concerning the liquidity explanation wey they ask, liquidity inducement, rather inducement na when you see reactions, candles reaction, you understand, wicks or candle reaction, any level where they close to the POI where they deal with, where they close to key level. See now, if I go line chart now, see the key level here. Now this line chart we they deal with, price break am, they come back. So, but for you to get more confidence on this setup, you need to see some sort of price interaction before he hit that key level. Now him be inducement. You know understand? Now him be inducement. No be saying I want hard something. Now inducement be that. And if you look here now, this day reject this day, it close here, right? You don't confirm and say okay, you go sweep all these previous days where they here, come hit this key level, come back, come close bearish. Now sign for you say market they bearish be that. You understand? Inducement can be one candle, it can be two candle, can be three candle, can be series of candles. You understand? Provided it is close to your POI. Now inducement. If you check here now, make I also randomly look for another example give you. You get, if you look this place now, see this candle now, see this low, see this V shape where they here now. See say he use this candle take do inducement liquidity. You understand? Now liquidity they always they push price. You use this one candle take do inducement, which is sweeping a previous day, tapping into a key level before expanding. So now always inducement be that. If you check inducement they choke, they choke. You understand? It depends on strategy where you they apply to trade, but most cases in all strategies, all inducement level, inducement price go they very close to the key level where they try trade. If you look again, you go see, make I find another one where they clear. You can find another one where they clear to see. Where they very clear. Where it did, where it did, where it did, where it did. You see like where that tool there. You see like this key level now. You see A shape. You see A shape. As you see A shape, wait till you see here. This high becomes inducement to see make I expand the chart well. See A shape key level. This high, all these ones like this, now inducement, but because you won't make it be say inducement they close to the POI, you know go they look all this one because it far from the POI. You understand? So you need something like this or something like this as inducement. So you see every price action where they below this high now, all now inducement it be to this key level. If you come like this, you see the A shape. So for price to reject from here, price needs sweep some sort of liquidity, which is inducement, before price reverse. And now exactly what happen here. You see about daily candle rejecting a daily key level and closed bullish. It closed here. What do? You go to 4-hour time frame, and on 4-hour time frame, what do you do? You start looking for a rejection and a break of structure to the downside. Do you get? Basically, you see this particular day na im go hit the key level. So you see everything wey dey here from this previous day now, all like this na inducement e be to this high. You understand? So daily candle rejecting a daily key level and close. You can now see a rejection and a break of structure. This is the break of structure. Do you get? This is the break of structure. A rejection and a break of structure for price to come back. In this scenario, it did not play out. Do you understand? Okay, speaking of inducement, see another one. See, see key level, V-shaped key level. But if you look here now, you see say some kind price action weak dey below here before the key level, and e no too far. Now be inducement level. You understand? Price go sweep that inducement, tap key level. You know, see this now na 4 hour. See 4 hour rejecting a 4 hour key level. On 1 hour time frame, you can see a rejection. You can see a rejection like this on 1 hour time frame. You can see something like this. A rejection. No. And delete this thing. Add round where. On 4 hour time frame, you can see something like this. A rejection. A rejection and a breakout like this. Then you now wait for pullback. Then boom. You understand? So now waiting inducement be with this. Any liquidity where you dey trade, where they close to your POI, now be inducement. You understand? Make I delete this thing. So now go back to that particular example where we been dey talk about. If you look here now, where that example they say, now be this. Yes. You see Amber. So from daily time frame, you go see say, sorry, I get one analysis here, I no want delete am. From daily time frame, you go see say, see the key level they treat here, right? And see this weeks, this price action, it dey close to this place. Now be inducement. Price is going to induce it and go into that key level and reverse. We now have a daily candle rejecting a daily key level. You understand? So a daily candle rejecting a daily key level, sweeping liquidity. That makes sense, right? It's better than when you see a daily candle rejecting a key level like this without inducement. So you want inducement liquidity to be there so that you have what? Price will attack liquidity, rebalance and holding balance at a particular pricing level. You now have a daily candle rejecting daily, or rejected daily rather, because this candle must close. Then you now go to 4 hour time frame. On 4 hour time frame, what do you see or what do you look for? You want to see a rejection and a break of structure to the downside, which is this, a rejection and a break of structure. This is the break of structure. You understand? After the break of structure, what do you have next? You have key level here, 1. You have key level here, 2. You have key level here, 3. The way you look for inducement for here to this key level, it is advisable you equally look for inducement again to this part, any of the levels where you want trade. You understand? So when price open now, you want to see some sort of liquidity accumulate here before you trade. And now why price use this high, especially this one. Now why price come back, can't use these highs now as inducement? Because it dey closer to POI. Price just use it as inducement, tap POI and it drop. You understand? So basically inducement na key level, na price action wey dey near key level. You see as e dey near am. No be this inducement wey go dey this kind place, your POI dey here. No. Inducement na price level wey dey near POI. So the market is most interested in what? Interested in liquidity, areas where there's money, where there's liquidity. So all this inducement where they see, so all this inducement level where they see, so money dey here. Now it is simply they tell you with that, where the symbol of money dey. Yeah, money dey all this place. Money dey all this place. Others dey here. You understand? and you know say na inducement dey push market. So when price come now, because same money dey here, price go come hit here, you go come reject, you come you do U-turn, you come find another inducement liquidity wey go create keep here, you come sweep am enter key level before you reverse. Na wetin e just mean be that, no be say na one hard something. You understand? I hope this short video explains it better. So if you want to spot inducement levels before you trade your daily reject daily, just go to daily time frame. It's not difficult. Just do like this, expand. You understand? You can start looking at what price is doing here. See, like this place now, you can mark this key level here. Yeah, you can mark this key level here. You can mark this open close key level here and wait and see what happens. You can consider these levels as inducement. You see as inducement. So what you see do? What you see price do? Price reject daily key level. Which daily key level it reject? It reject this one, reject this one. So you can just just pick one, but preferably me, I'll pick this one now because now in they show for line chart as V-shaped key level. So you do what? Daily reject a daily key level, price attack liquidity, rebalance and hold imbalance. You see, imbalance still dey here, but not in all cases. Some cases you know go get imbalance. Price attack liquidity, rebalance and hold imbalance at a specific pricing level and came back and close bullish. Do you get? This is what we call daily reject daily. You understand? Then you can't go 4-hour time frame. So on 4-hour time frame now, what did they look for? Two things. They look for a rejection. This is the rejection on that key level from that day, that particular day. You want to see a rejection and a break of structure to the downside. Period. Even if you come back line chart, you wait until you see that break of structure, previous leg. You see a rejection and a break of structure before price go now do U-turn, come back. It must get liquidity where it define come. You know, understand? In this particular scenario, as daily reject daily where you give break of structure, here now it weaken. You understand? Some strategies know they interpret weak as break of structure. Some strategies they interpret weak as break of structure. But me, I interpret weak as break of structure. Why? Because a weak on a higher time frame is not a weak, it's a full body close on a lower time frame. This 4 hours, you see, on 3 hours now, is this not a break of structure? It's a break of structure. So I don't completely condemn weak. So this is a breakout for me. You mark this as a breakout. It's a breakout. Then you do what? After the breakout, you check your line chart. What do you see? You have a key level here. Let me use this line. You have a key level here, an A-shaped key level here. You have what? You have another one here. You have another one here, right? No, you don't have this one yet because this is where the break of structure happened. So you don't have this one yet. What do? You have this, you have this. Now you have two key levels. The problem now is that you need to now look for inducement level, because if price is going to come to this key level, it means that price will take out this high as inducement level and tap on this place to sell. Or price will do what? Price will come back to this level and sweep what we have here as inducement. Do you get? Sweep what we have here. Look at this candle now. One candle can serve as inducement on this strategy. One candle can serve as inducement on a higher time frame. You understand? So price now sweep liquidity, but in this scenario, it gave us what? A miss entry. Price did not even bother coming to tap the key level before it dropped. Jamba. Now why is he say okay, a rejection and a breakout? After a rejection and a breakout, price will come back to key level. There must be inducement before you execute. There must be inducement before you execute. Look at this breakout now. Look at this breakout from here to here. Look at this breakout. Price came back to this region and sold off. But what did price do? Price use this other high where they here, this previous high where they here, as inducement. See, inducement must be close to POI. You can see a previous open close key level here that price used to sell. Now why it be inducement with that. So inducement level no dey mostly dey far from POI. And if setup no get inducement, like see this place now, make I clear this chart just to show you something. I'll clear this all these ones now. See this place now. Assuming see this V shape now. Assuming you are not following the structure, you see this V shape now. You want to look here now as inducement, right? But if you look at now, this price action wey dey here, it dey far from this place. So you want something to be like this. Anything from all this side like this, come here, all na inducement, perfect inducement. But the can't set up where you define. You need to find inducement, make it dey far from your POI. I hope you understand this now. In my next video, I will do a video on other strategies, and I know that video now it go help you understand this inducement thing well. Understand? Thank you very much.